Your segment, the International Insect Rearing Workshop. You might think that growing insects is easy until you actually try it. Time now for the markets with Leighton. And Leighton, you say it could be a shift away by consumers as beef supplies tighten?
Chicken and pork may actually pick up market share, as we'll hear in a few minutes. Also ahead this week, a forecast of more soybeans in the pipeline puts pressure on bean prices. A big drop in cattle placements is expected, while a Mississippi-based poultry company's out-of-state expansion remains on hold. We begin by taking a look at the monthly crop and supply demand numbers from the USDA, reports that turned out to be bearish, especially for soybeans. Extension Ag economist John Michael Riley provided some analysis of how the November 9th numbers could impact grain and oilseed markets. John Michael, a bearish reaction as far as the grain markets to what these new reports had to say. Let's kind of recap corn and soybeans, what the picture is.
We'll start with soybeans, really the leader of this bearish reaction. Market was looking for the total production to be lower than what it actually came in at. Start with yield. Yield projected by USDA 39.3 bushel an acre. Not only was that higher than the average expectation, but it was outside the range of those expectations. That pushed production up just under 3 million bushel an acre. Trade was looking for that to be right at 2.9 billion bushels an acre, or total billion bushels of production. So a larger total supply of soybeans than what was initially expected, and that put a lot of pressure on prices that day. Corn, mostly a neutral report, not a whole lot of changes really anywhere in production or in use. 122.3 bushel per acre. That's slightly higher than what it was a month ago. Production 10.75 billion bushels. Again, close to where we were at last month. But prices were suppressed largely due to some spillover from soybeans. So for the most part, beans really led the news on the report.
And as we were talking off camera, this is good news as far as the livestock sector, in that soybean meal prices should come down. That's right.
We've already seen prices start to drift lower, and that's definitely going to, as you go through the pipeline, that's going to lower those prices. Soybean meal, soybean oil, all of those uses should be lower, which should be a relief for our livestock producers.
And as far as the export picture for soybeans, what's that looking like now?
Well, there weren't a whole lot of changes on exports, beans or corn. We have seen the dollar strengthen, and there has been some reaction as a result of that. But in terms of the big picture for the whole year, this mostly has been isolated in terms of the whole crop marketing year. Not a whole lot of changes yet. If the dollar continues to strengthen, that might be a different story, though.
And as far as soybean prices, unless we see some situation change with this South American crop, that would be one way that prices might come back up.
Well, we're starting to see stories of higher production in South America, and that's probably going to keep pressure on, but that's going to be what we're keying.
And as far as corn outlook for prices, probably going to stay in this trend as far as corn?
Well, again, those are going to be tied together, soybeans and corn, but for the most part, yes.
Pecans are an important part of the upcoming holidays, and it is the subject of our trivia quiz this week. How much of the world's pecan supply is produced in the United States? The answer is one of these: 48%, or 67%, or 80%, or 95%. You'll find out here in a few more minutes. We're recording about 24 hours before the release of the monthly cattle on feed numbers from the USDA. Brownfield Ag News reports analysts on average expect the data to show a big year-to-year drop in cattle placements. Marketings, meanwhile, are expected to increase slightly. In the hog sector, demand for pork is being described as stable here in mid-November. Analyst Walt Hackney believes expected higher retail prices for beef by next spring will only serve to strengthen the demand at the meat counter for pork as well as chicken.
Anytime we can maintain a stable demand for pork, killing 2.3 million hogs a week, 435,000 head a day. Anytime those projections are laying out like that, the demand is really there, and pork is really able to compete. It'll come down to, what do you prefer? Do you prefer a poultry dinner? Or do you prefer a pork dinner, or does it make any difference? If it doesn't make any difference, they'll both run a photo finish. If it makes a difference, that'll be the one that wins the race. And pork is probably not quite the contender as we'd like to see it.
Laurel-based Sanderson Farms announced this week that Nash County, North Carolina will not be the site for that company's new poultry processing complex due to various timing issues. CEO Joe Frank Sanderson Jr. says plans for a new plant anywhere are on hold. The company says that market fundamentals, including the supply and price of corn and other feed grains, must improve before a new complex is built anywhere. Well, before our new feature story, here's the trivia answer for this week. The right choice is C. The U.S. produces about 80% of the world's pecans.